this conference. I hope it's going to be valuable for you. One of the things I love about this conference is two things. Number one, it's a reasonably small conference. Number two is the level of discourse, as far as I'm concerned, is probably the best that I've seen in any conference anywhere, specifically on the topic of mobile commerce. So in 1984, our world changed. Two e-commerce sites opened. Anybody know who they were? One of them was Tesco in the UK. The other one was the CompuServe Mall. CompuServe was a precursor to AOL. It was a walled garden. It was pre-internet. It was pre just about everything. It was all text, really slow. We talked about 18.8 baud, which was 18.800 bits per second was the speed that was being run there. I remember telling people when they were developing websites to not build for 18.8, to build for 25.5. And so that's where we were. Anyway, since then, digital commerce has grown to $29 trillion in the world as of 2017. About 1.3 billion people have made a digital commerce transaction since digital commerce was created. And since there's about 7.5 billion people in the world, that means only 17% of the population of the world has ever done a digital commerce transaction. The upside of this space is scary good. If you think about that, we have nothing but upside opportunity in front of us. The machine that makes these transactions happen is a repository of information stored online, in a phone, on a chip, or in the cloud. It provides the merchant with the information they need to make sure that you are who you say you are, in many cases, not all, of course, and that you have the money to pay for what it is you're buying, in many cases, not all. But that's what it's all about. It's called a digital wallet, and that's what we're here to talk about. The rate of growth and the amount of change is simply stunning, and we're really fortunate to be working in a field that not only creates a great deal of value, but as you'll see through the presentations, we're actually doing a lot of good in the world. And that's what I get very, very excited about in this space. Deeply impoverished countries with really huge economic and political problems are creating payment platforms that are enabling millions of people to pay for things without using cash for the first time in their lives. And in other countries, massive new commerce markets are being created. So you look at China, there's now a safe and secure payment ecosystem all about mobile payments. 90% of the people in China use either Alipay or WeChat Pay to pay for whatever they're doing wherever they are. That was a market that didn't really exist not even 10 years ago. Countries like Zimbabwe didn't have a payments platform until 9 years ago, and now 90% of their people are on a digital payments platform. So what we're doing is important for the good of the world. It's important for commerce, and it's a really, really exciting business because 80% of the people still haven't ever done it, so it's a pretty good thing. Over the next few days, we're going to be talking about digital wallets, mobile payments, and everything out there that helps to reduce friction in the commerce space, purchasing either online in the physical world. But today we're going to be talking about everything from the digital transformation of commerce to the impact of loyalty on the space, use of voice and ultrasonically enabled payments, and we're going to get into the world of legal cannabis. And lastly, we're going to have an award on an innovation that I think is really, really breakthrough stuff. So with that, I hope you enjoy the conference. It's going to be a really good conversation. So our first panel is the digital transformation of payments. What's next? What are the key market forces, trends, and technologies that are disrupting the retail payments value chain and creating new battlegrounds for all ecosystem participants? The moderator for this panel is a really good friend of mine, Jordan McKee from 451 Research. He's a research director. 451 is an advisory and research firm in the payment space. He covers the Experience in Commerce Group and leading its coverage of the payments ecosystem, focusing on digital transformation strategies for payment networks, issuing and acquiring banks, payment processors, point-of-sale providers, and other payment interest-free stakeholders. He's frequently quoted in publications like Forbes and Times and Business Week, and he's also had television interviews with the Associated Press and CBS, and that's because all the other analysts in the country feel that Jordan is the best-looking analyst that we've got, and that's why he gets those gigs. So with that, I'll turn it over to Jordan McKee.
Thanks for joining us. As mentioned, my name is Jordan McKee. I'm a research director at a global industry analyst firm called 451 Research, and joined on stage by leaders today from Discover, Evolve Bank and Trust, and ActMinds to discuss the digital transformation of payments. So there's a quote I love when thinking about what's going on in our ecosystem today. It's a quote from our neighbor up north, Justin Trudeau, something he said at the World Economic Forum last year. He said, "The pace of change has never been this fast, yet it'll never be this slow again." Let's let that sink in for a minute. The pace of change has never been this fast, yet it'll never be this slow again. When I think about payments and I rewind, 7 or so years ago, we thought things were moving really fast back then. We saw these crazy retailers getting together to form the merchant customer exchange, right? Big retailers like Walmart and Best Buy and 7-Eleven that were going to disintermediate the payment networks. We saw telcos joining together in an initiative that was unfortunately called ISIS and rebranded a soft card for obvious reasons. And we saw startups coming from all different directions, companies like Stripe and Square, that looked to challenge the incumbents that participated in the payments value chain for many, many years. Today, we look back at that time and we say, wow, we were barely moving back then, because today we have real-time payment initiatives operating at scale in many markets around the globe. And we have technologies like payment tokenization that are bringing transactions into IoT devices. We've seen mega consolidation, right, with three $20 billion plus deals occurring this year. And we've seen wallet capabilities embedded into the operating systems of millions of handsets around the globe. And in another 7 or so years, we'll look back on today and say, you know what, we were barely getting started back then. And that's just the new reality in payments. The pace of change, the tempo of change is rapidly accelerating, and it's forcing us all to adapt at a speed that we're not accustomed to. And that's what we're going to unpack today, right? What are the drivers of change in payments, and what's the impact for all of you in the room? So to begin, I'd like each of my panelists to briefly introduce themselves and their companies to give us some context on the perch at which they look at the payments ecosystem from. We'll start with you.
Hi, everyone. I'm Soumyadev Chakrabarti. I'm with Discover Global Network, part of Discover. And as part of the network team, I've been up until recently leading our R&D and innovation team, and now also responsible for fintech partnership development. So happy to be here.
Thanks. Donna.
Hi, I'm Donna Embry, and I'm Senior Vice President of Global Payment Strategy with Evolve Bank and Trust. And Evolve Bank and Trust is a bank that basically positions itself as the fintech bank to work with a lot of fintech companies to provide banking services that will allow fintechs to evolve.
Okay, hi. My name is Alex. I work for Actimize. We provide digital accounts and mobile payments platforms to banks, retailers, and fintechs. These platforms help them accelerate the execution of open loop or closed loop payments projects. We have around 100 customers ranging from fintechs, startups, to big retailers and banks. And I'm pretty happy today to talk about this fascinating topic.
All right. Thank you, everyone. Happy to have you all. So, to begin, let's kind of level set around the key driver of digital transformation, which is change. As I alluded to, there's been no shortage of change in our industry over the past decade. But I'd be curious from each of your vantage points, what do you see as the aspect of payments that's seen the most significant change over, again, let's call it the past 10 or so years? So, how about we start with you?
Yeah, I think we probably look at it as two different answers. So if you think of just U.S. payments, right, there has been the majority of last 10 years of the decade has been around upgrading to EMV, even though it was probably not as new to the whole industry, especially in other markets. And part of that journey has led to some of the other things that we can do now with better security and better cryptography available to us. But if you think of overall the payments industry, the biggest change, I would say, in the last 10 years or so is the transformation of to mobile-first solutions. Right? So as an industry, whether it's the types of payment providers you just talked about in your opening, from Stripe to Square, or to the solutions such as Alipay and WeChat Pay in Asia, or Apple Pay and Google Pay here, a lot of payments and fintech solutions are all mobile first. And even now, banking solutions are mobile first. So I think that mobile first mentality is probably the biggest change in the last 10 years, and that's driving a lot of our innovation now.
Yeah, that's an interesting perspective. I mean, just to kind of echo that, we launched a forecast at 451 recently that looked at the volume, the transaction volume of mobile commerce globally. And this year, for the very first time, we anticipate that the volume of m-commerce transactions will surpass that of e-commerce. And by 2022, m-commerce is up to about 55% of digital commerce transaction volume overall. So increasingly kind of moving towards that mobile first world. Donna, I'd love to hear your take.
Yeah, I think I bring a unique perspective on this, on the whole payments environment. When I started in payments 53 years ago, there was this brand new payment that was coming out called Bank AmeriCard. There was no technology. There was no point of sale. Those of you that were around this morning in the workshop heard that this is now the 50th year of the ATM in the U.S. So none of that existed when I started in this industry. So I've been fortunate enough to be able to see quite a bit of change in everything. But one thing that I think is important to note is that even though you have change in technology, until that technology becomes a ubiquitous solution for the consumer to adapt to, that it really isn't what I would consider a mass marketed product, a mass marketed technology. So to answer the question of what do I think is the biggest change in our industry, I think it's a convergence of three things. One is a convergence of the internet with the face-to-face retailers, with the mobile technology that basically allow the consumer to change. So the biggest change that we're faced with today is the change in the consumer and what the consumer expects.
And Alex, your take.
Okay, well, I believe there are some very powerful forces that are driving changes in the payment industry. The first one, as mentioned, I think I believe it's the smartphone. Everybody has one. Everybody uses, most of the people use it for everything. And it just seems natural, straightforward to think as this as a device for payments. That's just natural. And the other important force is about generational change, because millennials don't want to write checks. They don't want to go to a physical branch to use some financial service. So these two forces are causing what I call the perfect storm in some countries like China, India, and Brazil, as mentioned, because these are helping people to have access for the first time for financial services. And this is improving people's lives and improving the economy as a whole. And even in the West, I don't know if you know, but we have more than 50 million people here, 50 million adults, who are unbanked. They don't have bank accounts, or they are underbanked. They do have checking accounts or saving accounts, but they don't have access to other kinds of financial services like credit cards or loans. So this perfect storm could also happen in the United States, and I believe it could do a lot of good, as mentioned in the keynote just a few minutes ago.
It's a great take. I would echo all those and maybe just add, the observation that I've made covering this space over the past 10 or so years is that payments have become part of the customer experience. And I think if you were to talk to a large retailer, a decade or so ago, generally speaking, right, many would think of payments just as a cost of doing business, as something that chews up margin. And that's still the case today to some extent, but I think now more than ever, you're seeing retailers really look at payments through the lens of the customer experience and think really deeply about the role of payments in driving conversions, about the role of payments in establishing ongoing relationships. And I think, as you alluded to, with the shift towards mobile, which is kind of powering that forward, you're really seeing the role of design, the role of simplicity in payments rise to the surface more than ever. So we've talked a bit about, what has changed in payments, and I'd love for us to now kind of look into the future a bit and explore some of the opportunities that lie ahead for our industry. What exactly about payments has not changed today in a significant way, but is on the cusp of evolution? And again, if you could add to that, what are some of the implications of that shift that you might see occurring? And so maybe we can begin with you again.
Okay. Yeah, I think it's always the million-dollar question, right, of what would change. But I think generally speaking, if you again talk about the change that has happened, we I just mentioned mobile first solution, but it's still going to a particular consumer device. So, I mean, if you look at what we have progressed and even taking Bank America card, we used to give them a card, then we tell them to go to a browser and then go to an app. But we told them always to go to a specific device. I think what we would start seeing is more contextual, of meeting the consumer in the place they want to do commerce, in the device that they are already using. So whether it's they're using some other device at home, or they're in their car, or they're at work and using some work device, and being able to do their commerce, do their go on with their life, meeting them where they are. That would be the next big thing in the next few years. So I think that is a critical part of ensuring and continuing to develop on that user experience that you briefly mentioned. So the design aspects will continue to push us towards meeting the consumer where they want to be met.
Yeah, that's a great take. And I think, the idea of contextual commerce has been, talked about for so long, but we're just only scratching the surface of the opportunity there of, getting the right product, the right commerce opportunity in front of the consumer at the moment that they need it. So much more to come there. Donna, how about you?
Yeah, I'm actually going to diverge a little bit down a different path. We talk a lot about money out and payments and how from the acquiring market, how people pay for commerce and pay for goods. But I really want to talk about an opportunity that I think is going to explode this industry, and that is the opportunity that we have with the gig economy, with those workers that are not traditional employees. The latest statistics are there are the market size of that is $1.4 billion, and that the market expects the gig economy to have 43% of the workforce by the year 2020. That's amazing. And what they're looking for is how to get money in when they work and when they do these contract jobs. How do they get paid? How do they get money to their accounts so they can be on the acquisition side, so they can pay for goods and services? So I think the big explosion will be those processes and those fintech companies that come up with ways to make real-time payday advances, other types of person-to-person payments, as you've seen with the explosion of Zelle and Venmo, and how you move money back and forth so that consumers can have instant disposable income to be able to pay. And I think that's the big opportunity that we're going to see.
Yeah, that's an interesting idea in terms of where the gig economy could take our industry. There's many inefficiencies in the gig economy model from a payment standpoint, right? When it comes to fraud, when it comes to payouts, especially real-time payouts that are desired, and there's still infrastructure that's needed to facilitate that, right? We're seeing some of that through things like Visa Direct and MasterCard Send, but I think real-time payments, right, is a critical piece of infrastructure that could really lube the wheels of the gig economy.
Right, and I think we mentioned before, someone mentioned the unbanked and underbanked. One of the biggest payments that the underbanked looks for, are payday advances. How do they get money, and how do they get money faster? So I think that's also another market segment that can be capitalized on to be able to make these real-time payments.
Alex, your take.
Yes, I agree with that. And I think one of the biggest issues to be addressed, especially in the United States, is the lack of standards for mobile payments. So we have too many technologies, too many ways to make payments here. And it's hard. It's hard for consumers. It's hard for retailers. So it needs to be addressed by the industry itself or by the government, as it happened in other countries. So that's a very important issue to be addressed. And the other one is about the infrastructure for clearing and settlement of payments. We need an infrastructure capable of processing those payments real time, 24/7, at a very low cost, much lower than today payments rails. That's very, very important for digital payments. We have this kind of infrastructure in some countries. In Brazil, probably next year will be an infrastructure like that. I heard that in the United States we have some very important initiatives as well, like real-time payments and the FedNow, just announced by the Federal Reserve a few weeks ago. So that's very, very important to drive digital payments.
Yeah, Alex, I'd love to pick on you about your point on standardization for mobile payments. Could you just expound on that a bit? I mean, what are some of the benefits of having clearly defined standards in place when it comes to market opportunity and growth?
Sure, sure. Because for the consumer, it's kind of confusing to, in some situations you generate a QR code, some situations you need to capture a QR code or going to use NFC. So it's very confusing, and we don't want to be bothered by these problems. We just want to pay and go out and not thinking much about how can we do the payment. That's very important. And on the retailer side, it's hard to have many different ways to receive because you need to conciliate all the payments, and it's hard for the cashiers to understand how each technology works. So it's very important to have a standard, to agree on something that everybody can use.
That makes sense. So let's shift gears here and talk about some of the enabling technologies that we have at our disposal in our ecosystem. You know, we've hit on some of them already. Things like mobile, real-time payments. You know, we're seeing IoT come into the mix, artificial intelligence, you know, tokenization. Right? There's so many enabling technologies as an industry that we can work with today. And I'd be curious to hear each of your perspectives on which of those enabling technologies have had or perhaps will have the greatest impact on the market. And if you can share also how these technologies are starting to change the battleground, right? What are some of the new competencies that we need in our industry to be able to interface with these emerging technologies that bring to life new experiences? We'll start again with you, Soumya.
Yeah, I think you highlighted a lot of the technologies that almost everybody in this room probably is paying attention to, and they'll all contribute and move the discussion forward in payments industry and in a lot of those cases in multiple industries. I think from our perspective, you know, whether it's AI or payment tokenization, some of those technologies will continue to drive use cases that are paramount and baseline to payments, right? So you need to always have the highest level of security and continue to improve on security. You'll continue to improve on efficiencies as an industry. You'll continue to improve on how to reach the customers at the right moment. So marketing, insights, understanding the customer better. So I think they'll all try to contribute in different ways. The one thing which may be a little more for our industry to focus on and understand better at would be around what is getting bucketed under IoT. But it's that same notion of, you know, what devices a consumer might use and what devices a merchant might use, and that's blending, right? So the same device could be a merchant device, could be a consumer device, and as we progress further, there may not be a device, right? So understanding that nuances of multiple devices can play multiple roles, and figuring out the right security, the right authentication of the device, of the consumer, of the underlying transactions, that will be a critical part. That will be, not necessarily true for all industries, but definitely for payments.
Yeah, I think, you know, with IoT especially, you're starting to see that blurring of the lines occur, as you mentioned. And what's going to be particularly interesting to watch is what authentication is going to start to look like in IoT when we're interfacing with devices that don't have a keypad, that don't have a screen, where it's our voice that's the user interface. You know, that has a whole host of implications for how we vouch for our identity and how we initiate transactions that I think as an industry we're exploring, but are still kind of early on in terms of finding concrete solutions for. Yeah. Donna, your take.
Yeah, I think when I step back again and look at this, I always want to come at it from the consumer perspective and the consumer point of view. And with all of this convergence of technology, there is so much data out there. I mean, there's more data than consumers can even deal with. And I think that the opportunities out there for the technologies in the future are those that work with proximity marketing solutions to be able to target data that matches the consumer and matches that consumer's life cycle and their life patterns, as opposed to having them have to go in and think and choose and sort out all this data to something that's meaningful and relevant to them, that it becomes customizable by consumer. And I think that with the use of authentication, the use of getting rid of cards, physical cards, so that the consumer has something that they just feel that is meant for them to go where they go, do what they want to do, when they want to do it, and pay how they want to pay with whatever technology I think is the future.
And I think machine learning has a really interesting story to tell there. In the payments ecosystem today, we're using it obviously for fraud prevention. It's starting to work its way into the acquiring ecosystem to be used for lifting authorization rates. But I think the next frontier is exactly what you alluded to. It's around personalization. It's around using ML to unpack patterns in data that can allow us to better engage with customers, right? I mean, at the end of the day, I think that is the big opportunity for all the data that we have in our industry, is just to create better customer experiences.
Yeah, and we're still at data lakes, right?
Right.
We're not yet at the
Right,
ocean
early
level, so-
days. Alex.
And I think that's a very interesting question because I believe that in the near future, the technologies that will have the most impact in the payment industry will be the ones that provide this frictionless experience, like we have with Uber. We call this invisible payments. So everybody who uses Uber know that we ask for a driver, we get into the car, we get out of the car, and we don't do anything to pay. We don't use our wallet, we don't use our cell phone. So in the future, near future, we're going to talk much more about IoT devices, sensors, computer vision, than talking about QR codes or NFC, because all the payments will be done in an invisible way. We can do that also with physical stuff, like Amazon is doing with Amazon Go stores. So probably in a few years, we're not going to have a mobile payment conference, but just a payment conference, and we're going to talk about the technologies that could provide this invisible experience for the consumers.
And I think what each of you are kind of hitting on is that payments companies increasingly need to think like technology companies. And our industry has always valued people with risk backgrounds and finance backgrounds. And of course, that's going to continue to be the case. But increasingly, it's people with data science backgrounds. It's people with engineering skill sets. And those are skills that are being tapped on by a whole variety of different industries. So we have a battle for talent going on as we try to become more like technology companies and try to get to that next chapter of evolution. So interesting times ahead. So I think we've kind of, again, scratched the surface on this one as well, but one of the interesting shifts that I've seen is merchants starting to get more strategic when it comes to payments. And as I alluded to earlier, you're seeing merchants look at payments through the lens of the customer experience. You're seeing them think deeply about how payments can actually be a lever to grow their top line, how payments can be a tool to move into new markets to sell to new customers, how payments can be a tool to create a better ongoing relationship, how payments can be fine-tuned to lift authorization rates and ultimately revenue. And what I'd be curious to hear is the observations that each of you have made in that regard. How are you seeing merchants focusing on payments today, and what impact do you see it having for the market longer term?
Yeah, I think I'll echo to Alex's point of like merchants also want to start giving the more and more of the frictionless experience, right? So, and as part of that experience, it could, in some cases, it could be invisible. In some cases, it could be the right amount of notification or nudge. But they ultimately want to make sure that the customer can pay where they want to pay and when they want to pay. While all of that is true, they also don't want to compromise, and we as an industry don't want to compromise on the underlying security and authentication needed. So I think it's going to be that constant focus, whether it's merchants or the industry overall, to ensure the best customer experience while not compromising on the underlying security. And there's always a tension between those, and that'll continue. But I think that's what merchants are realizing, that payments doesn't have to be this separate function. It can be integrated into the overall experience and make it more and more frictionless for the consumer.
Yeah. And an interesting shift I've seen in that regard is, merchants, especially digital natives, aren't necessarily making payments live within the treasury function of their business. And actually, if you go out and talk to Spotify as an example, in Spotify, payments actually sits on the business team, right? It's connected to all the other groups like customer experience, like treasury and finance, but payments within Spotify is focused on growth and optimization. Right? So it's interesting to see how merchants are kind of placing payments within different business units to drive the outcomes that they're seeking, which might not just be about cost mitigation, as potentially was the case in years past. Donna.
Yeah, when I step back and look at merchants today, I think it's not as much about the consumer experience as it's the survival of the physical retailer. As we saw the internet and internet e-commerce saw rise, but we also saw a decline in the physical environment. And I truly believe this, that the demise of Toys R Us was the fact that during the Christmas season, the one year when they actually allowed you to do online shopping and allowed you to perhaps come into the store and pick up the merchandise, they never had their inventory management system tied together, so they couldn't supply the demand that the consumers had. So we saw a big shift in retailers merging their inventory and the way their inventory is done, so that from a consumer standpoint, it's the same mass of inventory. I read an interesting article absolutely yesterday. It was odd that now that what the consumer is asking for is a faster time to ship. How fast can I get my goods? And they're actually saying that I will not buy from you online because I can't get my inventory, I can't get what I wanted fast enough. You can't get it to the store, you can't send me to the store, you can't get it to me, and I'm really changing the way, my whole pattern of shopping. And so I think that's something that could disintermediate the industry. But back to the question of payments itself, what is that one ubiquitous way of being able to pay to where, as a consumer, it doesn't matter if I'm doing online to pick up in the store, whether I'm doing in the store, whether I'm doing on my mobile phone, however I want to do that payment, I want to make it easy. I want to make my choice ahead of time. I want to get it done. I don't want to have to pull out something. I don't want to have to go to a wallet and figure out which card or account I want to use from. So a service like PayPal, I think PayPal's done the industry a big service by being able to say, just pay with PayPal. Just pay with, with some of the Visa, MasterCard payment options that make it easy. So I think convergence of payments in that space to make it easy for the physical retailer and physical goods to be able to come together, I think is important.
Yeah.
Alex.
Well, I think we are in a moment right now that the retailers have a huge opportunity to take the lead in the payments industry. And Starbucks Pay is a very good example of that. Starbucks managed to implement a very clever marketing strategy to drive use of their mobile app, giving exclusive discounts, the order ahead feature, and so on. And probably today they are the most used mobile payment application in the US. That's pretty amazing. And they have more than $1.5 billion in cash, in prepaid coffee, so to speak. So that's really interesting. Other retailers, of course, are following the same path with a branded e-wallet, because with a branded e-wallet, the retailer has more control about the consumer experience, and they can put into this e-wallet not only gift cards or credit cards, but also loyalty points, discount coupons, Bitcoins, whatever they want. And more importantly, with a branded e-wallet, with a branded mobile app, they can gather purchase information in a very seamless way. So that information is very valuable to the retailers, and they can use it to send personalized offers and deals. So it's a powerful tool to increase revenue, to increase loyalty. So I believe that the retailers have this chance today to change the game.
Yeah, just to build on that, Alex, an interesting trend that I've seen as of late is tender steering going on within merchant branded wallets, where merchants are effectively incentivizing and guiding the hands of users to use the lowest cost funding mechanism. So if you pop open your Uber app today, right, you can purchase Uber credits and use that as the payment source within Uber, so they're not paying a transaction fee each and every time, and they'll give you a small incentive to do so, right? And Amazon's using similar tactics. Kohl's as another example. If you want to use Kohl's Pay, it has to be with their private label credit card. So I think that's a trend we'll continue to see as more merchants look to kind of own more of the overall customer experience, including payments. So let's switch gears again and talk about what's going on in the M&A environment. So it's been an interesting year, as we all know, and actually it's been an interesting few years. If I look at some of the data from our M&A knowledge base at 451, globally, we've been averaging one acquisition of a payments company every 3 days for the past 3 years. And if I look at this year in particular, given the 3 mega acquisitions that we've seen, 40% of global technology, media, and telecom M&A activity has taken place in the payments industry. So $4 out of every $10 spent to acquire a company globally this year has gone to a payments company. So it really just speaks to the change, the transformation, the consolidation that we're seeing within our industry. And again, as I alluded to with deals like WorldPay and FIS and Fiserv First Data, Global Payments, TSYS, there's some commonalities between those acquisitions. And what I'd be curious to hear is, one, what are the drivers of these mega deals from your perspectives? And two, what does this mean longer term for our industry? So Donna, let's begin with you, because I think at a financial institution, right, you probably have a pretty unique take on what's going on here.
Well, actually, I think that because of being at a financial institution, I think financial institutions were the heart of what drove some of these M&A big acquisitions. I look at First Data, I look at the WorldPay / Vantiv, and I look at Global and TSYS sort of off to the side. But if I look at what they did and what their core competencies was, I mean, it truly was either the issuing or the acquiring processing, for consumers. When I look at Fiserv and FIS and some of their core competencies, it is the competencies of driving banking technology and banking functionality, which is the heart of money movement and all about true money, money transfers and wire transfers and money servicing businesses. And that I think that it provides a really good opportunity to converge those together so that it's all about the foundation of money. How do we use money? How do we get money? How do we transport money? And pulling in gaps that both Fiserv and FIS had in the acquiring space and the true issuing processing space. I think it's a nice convergence to pull all those together.
That's a good take. Alex.
Well, I believe that the traditional card rails business model, like charging a fee for each transaction, an MDR fee, is going to die. In Brazil, we are in the middle of very, very fierce price war between the acquirers there. And it's a textbook red ocean, what's going on in Brazil. And probably in the near future, the MDR will go down to zero or almost zero. And why this is happening? Well, how much do we pay to send an email? How much do we pay to send a photo or a video over the internet? Nothing. So how do companies and people need to pay to send money in a digital way? So I believe these M&A initiatives, of course, they are looking to gain scale, to leverage the so-called synergies. But I believe they are also looking to increase or find new sources of revenue, like providing credit, loans, because the MDR model, as I said, is going to die. So they need to find other sources of revenue, probably reinvent themselves in the near future.
Yeah, if I could add to that, one thing that isn't talked about a lot with these M&A activities is the convergence and the integration of debit networks and the networks that are out there. So if you look at, now you've got Star and Excel and some of the networks have now all gone into under the same umbrella. And then you've got this massive consumers with consumer accounts, and you've got an acquiring industry with numerous merchants on the other side of it. Does that then give us the ability, dare I say, to eliminate interchange and eliminate, those types of services, because you've got on us types of volume that basically can lower the cost for everybody.
Exactly.
Yeah, I think that's what I'm most curious to sort of see when it comes to these deals being completed and synergies being realized. Again, obviously, the stuff that they want in the near term, scale, right, distribution, that's apparent. But the question marks are, what are the outcomes, right? What are the net new gains that come out of these deals? And to your point, there could be some really interesting things when it comes to potentially new types of payment systems coming to the fore. So I think we've got time for one more question here, and it's a good one. So with all this fintech activity that we've been talking about today, it's occurring across all areas of payments, as we know. Really, every payment touch point, there's a fintech we can map to it. And I'm curious with a couple incumbents, if you will, on this panel, like Discover, and we've got a financial institution down there, right? How do you guys preserve your relationships with your customers? With all of these newcomers coming in and trying to earn a growing share of the relationship, what are some of those things that you need to do to ensure that you still have that one-to-one relationship?
Yeah, I think I'm gonna like steer back to your opening, right? Like the pace of change itself, and while it's the fastest that we've known, it's probably still slower than what it would be, right? So if you take that into account and take how we build stuff, like we have to continue to build and scale things that we already provide to our customers, continue to build and scale new experiences and create new value. But with all the pace of change, it may not always be feasible or probably not ideal to do it all, try to do it all ourselves. So we have always believed in like partnerships, and the right partnerships create an accumulative more customer value, and that value creation will continue to drive the customer satisfaction with us and the partner that we partner with. So from our perspective, the growth of fintechs or the growth of, in general, technology and other providers is a healthy thing for the industry, and that gives us more opportunities to partner with some of these players to create overall more customer value. So
it's a great take. Donna?
Yeah, banking, I believe, is the lowest common denominator of all this. I mean, you need a financial institution to do anything, whether it's settlement, clearing, whatever it is, whether you're talking to consumers or talking to corporations. So I believe that from the banking perspective, what they need to do is they need to open up and work with these fintech companies and enable them to be able to have those sort of real-time payment solutions to be able to grow their businesses and be able to evolve.
Alex?
Yes, but I agree with Donna, because probably banks in the future will not be the one-stop shop for financial services the way usually we see them today. But they will play an important role in the future because they have some very important competitive advantages. They get funding very efficiently. They manage credit risk very efficiently. So probably in the future, the banks will grow these relationships with fintechs, retailers to provide credit, for instance. And I believe that the banks that step ahead of the competition, start growing this network first, will be in a very good shape because they will have a very strong distribution network for its financial services. So I think it's a matter of just trying to find new channels of distribution to establish these partnerships. But of course, bank will play a very important role in the future. I don't see the world without banks.
Yeah, I think you brought up a good point that's worth kind of building on, right? It's this fintech ecosystem doesn't happen without financial institutions. Right? We can point to exciting companies like Square and Stripe all day long, but once you kind of scratch off the shiny veneer, right, it's the existing payments value chain, generally speaking, right? That's kind of beneath them, right? Underpinning most of the innovations that are coming into the market today. So with that, we're just about out of time here. Just quickly to summarize, three themes that kind of came to the surface for me when it comes to digital transformation and the observations that have been made. I think one, customer experience is front and center, right? It is sort of the thing that we all need to focus on and build around when it comes to payments. And increasingly, it's going to drive new types of experiences that our consumers are looking for into the market if we're maintaining that customer centricity. Two, technology, right? Our industry is becoming a technology industry. We need to think more like technology companies. And as a result of that, need to familiarize ourselves with emerging technologies and gain new skill sets like data science, like engineering, to bring new products and services to market. And finally, convergence. That was a big one that I heard across all three of your comments. We're seeing convergence everywhere, right? Convergence of companies, convergence of industries, and convergence of payment experiences. And that's only going to continue to be the norm moving into the future. So with that, thank you for each of your perspectives, and a round of applause for my panelists, please.